anyway. But yeah, no, look, Basent's going to be smart about it. Although I think the tariffs to me are a negotiating tactic. They're gonna basically go to other countries and say, play fair. We're going to hit you with a tariff. The positive about the tariffs is that they actually will raise revenue for the government, and the government needs to raise revenue everywhere it can.
Yeah.
So, look, these guys are thinking correctly and cutting expenses. They're thinking correctly about that. But the point I would make there is that, we spent 6.75 trillion last fiscal year ended September. 80% of that is Social Security, Medicare, interest, and defense. So, when they talk about taking a hatchet to government and cutting government, unless you're going to touch those four areas, and they might touch defense a little bit because they might be able to end the Ukraine war, it's going to be hard to cut. So the remaining 20%, even if you take 30% off that, that's $270 billion a year. The deficit last year was 1.8 trillion. The run rate on the deficit this year is 2.4. So, the deficit's a real problem, and the debt growth is a real problem for their automobile purchases, et cetera, et cetera. And if you go look at the charts on those statistics, you can see that consumer credit is just gone. People have maintained their lifestyle by going into debt. But, the one thing that happens when you do that is you've got to make the payments. And if you can't continue to grow that debt balance, the same thing happens to you that's happening to the government, which is to say, you got to take out a new credit card to pay the interest on your old ones, you got a problem.
Yeah. Actually, that's a good point. What do you think is a bigger drag on consumer spending right now? The rising debt levels and the higher interest payments that households have to make, or the high price of homes?
Oh boy, probably the high price of the interest. I think inflation, what they're paying for food and everything else. But I also think, yeah, the interest payments. I mean, the interesting thing about the housing market is I've heard about it. I've talked to several people about this. Housing market's kind of frozen. You've got because as we now know, there was a time where mortgages 4 years ago were 3%, right, which is a great rate. Powell tightened, mortgages went, I don't know, 7% plus. Then, as he announced he was loosening, they came back down for a while, and I think some people were getting some lower numbers. But now they've been going because like the 90 to build a new base at 90 or something. I don't know. That's just a thought. I mean, it's very hard to tell. And I never trade it. I never sell it. I just have my Bitcoin, and that's that. I view it as a long-term store of value, very much the way I view the gold that I own as a long-term store of value.
When you say 200,000 as a cycle top, when did this cycle start for you?
It kind of started when it was kind of trading around 50. I mean, the bottom was
Mm.
15, as you know, after FTX, but it kind of
Yes.
based for a number of years around 50-ish, 50, 58. I don't have
Okay.
a chart right in front of me, but and the history of these cycles is they tend to go to, 4, 5, 6 times, the base. So that would imply that we could get to, 160, 200, maybe even high as 250 or 300. I don't know. Then it would be quite extended above its 200-day moving average, and it would be quite extended above the power law model, which I think has validity because backtesting the power law model has described 97% of the movements. So, it's the thing I think people have to keep in mind is that it's a volatile asset with a strong bias upward. And I've always recommended people have a little bit of it, or the only wrong allocation is zero, and you should dollar cost average on your Bitcoin purchases. I mean, I was buying, whether you love it or hate it or emotion or whatever, it's just performing really well. And so then you kind of say, all right, somebody says, well, the bubble's going to burst. And I say, fine, what's going to change that? What's going to stop it from having that performance? I mean, the only thing I can think of is just catastrophic failure. And, I was worried about that.
Catastrophic failure, like what, hacking, or what do you mean?
No, I don't worry about hacking because it's technical, secure. When people are worried about quantum computing, but I think that's too far off. I don't worry
Yeah.
about that. No, just I don't know. I mean, just some bug that we're not aware of that just causes the whole thing to blow up. I mean, I was worried about that much more so in the earlier days. We're now 15 years in and 870,000 blocks into it. I think the odds of that are quite low.
Are you worried about the risk of higher concentration of ownership of Bitcoin now that ETFs are approved and it's going to become more institutionalized?
Well, there's, yes and no. I mean, they obviously represent honeypots. I mean, to those of us who are hardcore Bitcoiners that believe in self-custody, look, the ETFs came in and they were a really positive thing because what they did, they said to a lot of my friends who wouldn't buy it because they said, well, Larry, I'm not going to buy that because the government's, he just said, I'm issuing an executive order, I'm grabbing the gold and I'm repricing it. Boom, done. So, is this, in theory, the monetary system is controlled by, the Constitution and delegates the responsibility to Congress. But in practice, and says it can only be gold and silver. Of course, we've walked all over that. We don't do that anymore. And in practice, Roosevelt took it unto himself and did it. And when tested by the Supreme Court, they upheld what he did. So, it's who knows? Who knows what's going to happen? I mean, what I believe should happen and this is where I hope Percent, is intelligent about all this. We really need to do a monetary reset. The guy who's actually been talking about this the loudest and has the best plan is Luke Gromen, who's a macro analyst. We really need to. We've got too much debt, and we can't pay it all back. And I'm sure most of your listeners are familiar with the concept of a debt jubilee, which was used in biblical and Babylonian times. When the debt got too large, they just forgave it all and started over again. And we could do something similar. We could establish a new currency, back it with a sound backing, whether it be gold or Bitcoin or some combination of the two, and say, the old currency, it's devalued in terms of the new currency, and then suddenly the old debt would become manageable. That's enough to deal with this stuff.
Wait, what's your book called? Tell us about your book.
The title is a secret, and the reason it's a secret, it's a really cool title, and I don't want to let it out yet.
All right,
but it'll be out soon.
Okay, well, we'll stay tuned.
Take it at face value. The thesis is sound money, or I think it's the byline is why America is broken and how sound money can fix it. Okay. That's the byline.
Pretty good, pretty cool. This is the actual bill. Cynthia Loomis's bill on the Bitcoin Strategic Reserve. So this paragraph in particular, implement a 1 million unit Bitcoin purchase program over a set period of time, approximately 5% of total Bitcoin supply, mirroring the size and scope of gold reserves held by the U.S. Why do we need a gold reserve now in the first place in 2025? And why do we need a Bitcoin reserve for that matter?
Yeah, so I think both of these things, they're both great questions because they're both forms of sound money that we can use to mark our balance sheet up against. I mean, if you're going to devalue the dollar, we've made too much, we don't want these dollars anymore, give us those ounces. And of course, the ounces were flowing out the door so fast that Nixon said, oh, hang on a second, we're not going to do this anymore. We're going off the gold standard, which really was a default.
On an earlier comment about the Fed losing money, Fed's paper losses topped the $200 billion mark.
Isn't that amazing?
Yeah. This is from their operations, right? But that doesn't. The Federal Reserve is on a normal bank, so we don't. They're not going to default on their obligations. But okay, so going back to gold, then we talked about Bitcoin. What's your gold outlook? Gold's down 3% today. Just today, by the way, there's been talks of ceasefires. Or a ceasefire negotiation between Lebanon and Israel. Take a look at my screen. Israeli cabinet vote on Lebanon ceasefire deal after Netanyahu approves in principle. Could gold be reacting to a potential de-escalation of tensions in the Middle East? Now, remember, Trump did say that he wanted Netanyahu to end the war in Gaza with Hamas by the time he enters office. Perhaps this is what's going on.
I think that's probably a piece of what's going on in gold today, but I actually think the bigger piece is the very, very deflationary, very bad for a lot of markets, and the government will have to come in with what I call the big print. And when the big print comes, then you look out. Then Bitcoin's going. I mean, and by big print, I'm talking about the Fed balance sheet goes from 7 trillion to 20, and Powell says whatever it takes, and this is all because CRE or something else is blown up. And they can't contain it. And, I think the Fed balance sheet will go to 20 trillion, 30 trillion. And as you know, that'll be enormously inflationary. But it'll also send gold to, 10,000 and Bitcoin to 1 million.
Well, the loaf of bread by then will be $10,000.
Well, that's exactly right. And a loaf of bread will be $500, right?
If you take a look at the Bitcoin versus gold chart, which is what I have here, gold is the bar chart, and Bitcoin is a purple line. If you just
Yeah.
scroll back and take a look at history here, over the longer term horizon, if you just overlay these two variables, they have followed each other. I don't know if they followed each other more so than they followed a broader market or they followed Fed liquidity or something else, but there has been a longer term correlation. I'm not talking about the intraday
Correct. That
moves.
is correct. And the other thing, to get the problem addressed and to have a better world, I mean, I'm in this because I want my kids who are in their 20s to live in a better world. To get there, we got to go back to a sound money standard.
One final note I like to make.
Sure.
What do you think Bitcoin and gold are more correlated to? The M2 money stock, which I'll show on my screen here,
Yeah.
or the rise in the debt to GDP level, which has also been going up in a straight line?
Yeah. Well, obviously they're correlated to this because they both took off in 2020. Just as this went up 42% during
Yeah.
COVID, right? And they both took off like a rocket.
Mhm.
So they're very heavily correlated to this. But keep in mind that this is indirectly correlated to the thing you referenced, which is the debt to GDP, that the government runs. And so, because, effectively the Fed is the monetary mechanism that creates the growth in the M2 by putting the reserves on the bank balance sheet. And if the price is low enough for that cost of credit, then the banks loan it out and M2 grows. So they're all birds of the same feather. Do you know what I mean? And
Yes.
so I watch them all. I mean, I watch bond lost money on a real basis. Look, I mean, the bond market might rally here. If we get a big stock market bust and the economy really slows down, I mean, the trade is to buy a long bond because rates will come down in the long end, and they might. But to me, that's picking up nickels in front of a steamroller. Because I think that, we know that if and when what I just described occurs, we're pretty sure that the Fed will do what they've always done, which is they'll print like crazy, and that will lead to, interest rates, higher interest rates and bigger deficits.
Yeah, I misspoke. I didn't mean it's down 3%. I meant it's down 30 basis points over the
Yeah,
last
no, I knew
couple
I knew what you meant. Yeah, I knew
of
what you
days.
meant. Yeah.
All right. Well,
That's the percent trade. Again, everyone's really Wall Street loves this choice. He's a smart guy. And I can't argue with the choice. I mean, I'm glad. I'd rather have a smart guy in there than Janet Yellen, you know.
percent trade is, again, this is what the market thinks. The market could be wrong. Long bonds, short gold, perhaps even short Bitcoin,
Along the stock market.
long the stock market. But you think
Yep.
most